All right, it looks like we have reached critical mass here, so we are going to go ahead and get started. Again, thank you to everyone for taking time out of your day to join us for a special session on some of the latest and breaking student loan policy updates, specifically geared for county employees. Just a few housekeeping notes before we proceed. First of all, this workshop is being recorded. So if you have to step away at any point in time or you get distracted, not to worry. Everyone will receive a copy of this recording following today's session, in addition to other informational materials and resources that we talk about here today. That being said, I want this to feel as interactive as possible, not like I'm talking at you. So if you have any questions at all throughout the presentation, please feel free to put those in the Q&A. I will be monitoring that and pausing periodically to answer any questions that I can out loud, and any leftover time that we have at the end, again, we'll use to make sure that we answer any and all questions for those of you attending here today. And if you need to enable closed captioning or live transcription during the webinar, I'll be posting a link in the chat with instructions on how to enable this feature on Zoom. All right, so a quick look at the agenda that we're going to cover here today. I'm first going to do some brief introductions of myself and who we are here at Savi. And then we're going to dive right into the meat of the presentation. I'm first going to touch on, one of the biggest student loan forgiveness programs out there that county employees are all eligible for. That's a program called Public Service Loan Forgiveness, or PSLF. So I first just want to do a quick overview of exactly what that program is, how you become eligible, qualify, et cetera, before we then dive in and talk about what's going on in the world of student loans right now, as of today, February 13th. So I'm going to touch on some things that are on the horizon that we're monitoring on the legislative and regulatory landscape, and really what county employees should know and be doing right now when it comes to their student loans. And then we're going to wrap things up by talking about the Savi student loan benefit that you all have access to through your county employment, and what a valuable resource and advocate that can be for you in navigating your student loans going forward. So my name is Lindsay Clark. I'm the Chief Borrower Advocate here at Savi, and I lead all of our educational workshops and webinars on a daily basis. I've been doing this since 2017, and I'm a student loan borrower myself. I have a little over $200,000 in student loan debt. I mention that because in case it makes any of you feel better about your own situation, then mission accomplished right off the bat. But because being a student loan borrower impacts the way I communicate about this topic. I know firsthand how overwhelming, confusing, and complicated this student loan system can be, not to mention the fact that it's constantly changing. And so my goal here today is to communicate to you all around these topics in a way that feels very digestible and understandable, but that illuminates forward or the path forward on what you might need to do if you haven't taken that action already, and what the best outcome for your personal student loan situation can look like. And that's really where Savi comes into play. Savi is a social impact technology startup based in Washington, D.C. We were founded by student loan experts and advocates who have been fighting on behalf of the borrower for more than a decade. And in 2017, this was the first year that borrowers could start applying for that forgiveness program, Public Service Loan Forgiveness. And hundreds of thousands of borrowers applied, and 99% were rejected. And I'll get into the reasons why in just a bit here. But all to say, we saw this happen and decided to do something about it. So we developed Savi as a technology platform and a human service to help borrowers like you and like me not only better understand our student loan debt, but to navigate more successfully through some of these really complicated government programs. But along the way, our goal is to make the experience of being a student loan borrower a better one, because I think we can all agree it's not great. So we try to do that by identifying as much additional savings as possible on a month-to-month basis through things like income-driven repayment plans, while also helping you to determine and enroll in any eligible forgiveness programs. At Savi, we like to think that borrowers are our top priority and not their student loan debt. There are a lot of companies and entities in this space who are there to service your debt. They make money off of your debt. And that's not us here at Savi. Our goal is to put you, the borrower, first and make sure, again, that you are able to achieve the best outcome possible for your personal student loan situation. Which brings us to why we are here today, because Savi is an exclusive student loan benefit to several counties across the country. And that's how you received information about today's session. We partner with employers, membership organizations, unions, you name it, to offer our tools and services as an exclusive employer member benefit. So not just anyone can get access to Savi, but we are provided exclusively to you all, and not just you, but any family members as well. I know firsthand how student debt can run in families, as I say. I have student loans, my brother does, my dad does on behalf of my brother, right? So it's very common that you are not the sole person in your immediate family that may be impacted by student loan debt. And that's why I want to reiterate again that this is a benefit not just available to you, the county employee, but also to your family members, which is incredible. So we have partnered with some national associations like the National Association of Counties and ICMA to be able to work directly with a lot of your county employers and provide you all with access to this Savi benefit. And again, to reach that end goal of helping you achieve the best outcome possible. All right, so with introductions out of the way, we are going to dive right in. And I first just wanted to sort of level set around the big forgiveness program, public service loan forgiveness, that as an employee of a county, which is a government organization, all of you are eligible for. So public service loan forgiveness, or PSLF, is essentially full forgiveness on the remainder of your loan balance, whatever that may be. It could be $5,000, it could be $500,000. It doesn't matter. Tax-free, so there are no federal tax implications here, after you have made 120 qualifying payments. Now, if you could see me on video right now, I'm saying qualifying payments in major air quotes because the devil is really in the details as to what constitutes a qualifying payment. And it really comes down to satisfying these three things that you see on your screen right here simultaneously. Number one, you have to work for a qualifying employer. This is any government organization at any level, federal, state, local, or tribal, or any non-for-profit 501c3, okay? It does not matter in what capacity you work for that entity. All that matters is the employer on your W-2. So as an employee of a county that's a government organization, you are eligible for this program. The only stipulation is that you must work a minimum of 30 hours on average per week or more, okay? But you can combine multiple or part-time employment to qualify, so long as all of your employers are eligible. So let's say maybe you worked part-time for your county, maybe you did part-time work at a nonprofit. Combine, so long as you're averaging 30 hours or more a week, and so long as the various employers are all eligible and qualifying, you too can qualify for this program. So you don't just need to be full-time at one employer to qualify. All right. The last thing I'll say about employment is that this program is retroactive, going back to October 2007. Why October 2007? Well, that is when it was actually signed into law. And we're going to come back to that point later on when we touch on some of the more recent policy updates. But this program has actually been signed into law. It was passed through Congress under the Bush administration in October of 2007, meaning any qualifying employment that you've had from October 2007 to present day is fair game for the program. Even if you're just finding out about it now and you've worked in any qualifying employment capacity, again, that can retroactively count going back to October 2007. Unfortunately, any qualifying employment before October 2007 does not qualify or count towards the program, right? So that's number one, your employment. Number two, you need to have a qualifying loan type. And this is a federal program, meaning only federal student loans count, okay, or can qualify. So private loans are not eligible to receive public service loan forgiveness. But when it comes to those federal student loans, you need to have a certain type of federal student loan, and that type is called a direct federal loan. The direct federal loan program began around 2010. So if you have a federal loan dispersed to you from 2010 to present day, there is a 99% chance it's a direct loan. The easiest way to tell if it's a direct loan is it will literally say the word direct in that loan title, or it might say DL, which stands for direct loan. Doesn't matter if it's subsidized, unsubsidized, what have you. All you need to look for is that word direct, okay? So those are the qualifying loan types. Now, if you have a non-direct federal loan, okay, maybe one of the older federal loan types, which is called a FFEL loan, FFEL, which stands for Federal Family Education Loan, or a Parent Plus loan. These loan types need to be consolidated into what's called a direct consolidation loan in order to qualify. So you can still qualify for this program, but you'll need to take one additional step in sort of correcting your loan type before you can become eligible. And this is something Savi can help you to identify and to take action around. All right, so that's number 2, your qualifying loan type. And then number 3, you need to be repaying that loan on a qualifying repayment plan. And the only types of repayment plans that qualify are what are called income-driven repayment plans, okay? There are 4 types of income-driven repayment plans. We're not going to go into the weeds on the differences between all of those here today. It doesn't matter which one you're on. You just need to be on one of them and making that payment on time and for the full monthly amount. So you need to satisfy all 3 of these things simultaneously, okay, and reach 120, all right, of what they call these qualifying payments in order to receive forgiveness, at which point the remainder of your loan balance would be forgiven. Now, I just want to clear up some common misconceptions about these 120 qualifying payments. First of all, they do not need to be made consecutively. You just need to reach 120 total cumulative qualifying payments. So let's say you worked for 2 years for your county, okay, and accumulated 24 qualifying credits towards PSLF. And then you left. Maybe you went to work in the private sector or you took some time off. Nothing happens to those credits, all right? They simply pause in accumulating. And if you were to ever resume your eligibility by working for a qualifying employer, you could resume accumulating those credits. So again, they don't need to be consecutive. You just need to reach 120 total of these qualifying credits, all right? However, I will say that you can only receive 1 qualifying payment credit per 1 payment per 1 calendar month, meaning you can't double up on payments in a month and get double the amount of credits, or you can't make a huge lump sum payment and get more credits than you normally would. The easiest way to think about it is this. In any given calendar year of 12 months, the maximum amount of PSLF qualifying credits you can receive is 12, all right, 1 a month. So if you have to get to 120 total, right, when you can only receive 12 a year, you are all very smart and can do the math. That's 10 years minimum, right, before you'd be eligible to receive forgiveness under this program. And that would be if you were making those consecutively, right, which again, you don't need to. So for many people, it may take them longer than 10 years to achieve forgiveness. And it's why I discourage you from thinking about it as a 10-year program and encourage you to think about it more so around these 120 qualifying payments, because that's actually what will determine when and if you receive that forgiveness. All right, because oftentimes I see many county employees who have been working for their county for decades, if not more, but maybe they didn't start accumulating those qualifying payments because of when they took out their loans, et cetera, until just a few years ago, right? So it's not just about time served. It's really about satisfying those 3 things and making 120 of those qualifying payments with those 3 things satisfied: your employment, your loan type, and your repayment plan. Now, how do you apply or qualify for PSLF? Well, there's one form and one form only, and it's called the PSLF Employment Certification Form. This form gets signed off by you, the borrower, and then it needs to get signed off by your employer, any current or previous employers you may have had that qualify. So let's say you currently work for your county, and perhaps in previous employment, you've worked for 2 other eligible qualifying employers. That means you will need to submit 3 of these forms total, 1 for your current employer and 2, 1 for each of the previous employers that you had, okay? They usually get signed off by someone in HR with access to your employment records to verify the dates of your employment, that they're a qualifying institution, that you worked the appropriate number of hours, and then that gets submitted to the Department of Education, which reviews those forms and then awards you the number of credits that you have up until that most recent certification, okay? Now, you can submit this employment certification form at any point along the way in your progress towards that 120. So you could be a year into your employment for the county and submit this form. In fact, I encourage you to submit it early and often. The reason being, if you were to wait until you think you've reached that 10 plus years or 120 qualifying payments, it's much harder and it takes a lot longer for the Department of Education to go back through all of your employment history, all of your payment history, and verify that. And we've seen that it actually increases the odds that they make a mistake and don't award you the amount of credits that you should get. So we actually encourage borrowers to submit the employment certification form, at least for their current employer, every 12 months. That way you are basically certifying 12 months worth of credits, inching your way closer and closer to that 120. And that way there is no doubt in your mind and the Department of Education's mind when you reach that 120 and are eligible for forgiveness. It really allows you to sort of stay on track to track your progress and ensure that you get credit for every one of the payments that you've made. One last thing that I just want to mention about receiving credit for public service loan forgiveness is that the period during the COVID pandemic payment pause, which began in March of 2020 and went all the way through October of 2023. For the majority of federal student loan borrowers, payments were paused and interest was waived during that time. If you were working for a qualifying employer during that time, and you were obviously taking advantage of that payment pause, all of those months count as qualifying payment credits, even though you weren't making payment. So I believe that's about 43 months total during which you didn't have to make a payment. But if you were working for a qualifying employer, you can get those months counted as qualifying payment credits. So that's 43 towards the 120 total that you need. That's putting you a heck of a lot closer to that finish line than ever before. And the way in which you go about getting those credits, right, and certifying those months is, again, submitting that employment certification form. All right, I saw a quick question come in through the Q&A. Let me see here before we move on to some of these more recent policy updates. Okay, someone asks, if a person has already been granted PSLF in the recent past, is the current Trump administration able to rescind or cancel or claw that back? So this is a good question. And I'm going to touch on sort of the future of the public service loan forgiveness program in just a second. But all to say that the likelihood of that happening is very, very slim. First of all, when it comes to public service loan forgiveness, any changes to that program, including a repeal of it, would have to go through Congress. They would basically have to be done legislatively because it was written into law. Also written into the master promissory note that every single federal student loan borrower signed before they received the student loans is access and eligibility to public service loan forgiveness. So before we see potentially any rescinding of forgiveness or reinstating of student loans, that is probably the least likely of any outcome that we would see for that program. it may be more so reforms to eligibility, qualification, et cetera, and things like that. So while I cannot say with 100% certainty that that will never happen, I can confidently say that the likelihood of rescinding already forgiven student loan debt is less than 1%. So if you've received that PSLF or anyone you know has, they should be good to go. And this is why the Biden administration made a big push to try and issue as much of that PSLF forgiveness as possible before the administration's changed. All right, let's see. A couple more questions came through. Someone else asks, so does Savi have to be for federal loans, or does Savi include private loans? So this is a great question. We actually can help you with both. While the programs that I'm going to talk about here today are primarily impacting federal student loans, you can sync your private and federal loans with your Savi account. And if you have private loans, while they are not going to be eligible for any of these federal repayment or forgiveness or relief programs, we can still assist you in looking at what your best options may be. With private loans, oftentimes the repayment options are going to vary from lender to lender because there's no sort of overarching federal system, right, by which they must abide. So what we often do with users and employees who have private loans is we look to reach out to your private loan lender with you to figure out what options they may offer. Again, because they're gonna differ from lender to lender. So we usually do a three-way call with you and your private servicer and figure out what options you may have at your disposal. When it comes to private loans, that's something also that refinancing may be an option as well. Just so everyone knows, if you were to refinance your federal loans, okay, meaning refinancing them at a lower interest rate, I'm sure you've all received marketing or seen, in the news and around things like SoFi, right? That turns your federal loans private and makes them ineligible for any of these federal programs. So especially for you county employees who are eligible for a program like PSLF, I highly discourage you from refinancing those federal loans. But if they are private already, you can always refinance them, right? Because you don't have access to those programs anyway. Refinancing them at a lower interest rate could help to lower your monthly payment, or at least ensure you're going to be paying less over time, right? But, to answer that question, yes, we can help you with your private loans as well. Okay, someone else asked, what happens if you are doing the 120 months and you get a new school loan? That is a common scenario that we see. So what happens is you can kind of think of like your student loans as different horses in the race, right? So let's say you have loans from undergrad, right? And you are working for a qualifying employer and you're pursuing that 120. And then maybe you're taking out some new additional loans, right? For grad school or something like that. The timeline towards that 120 will just be different based on when you took the loans out. So perhaps on your prior student loan debt, existing student loan debt, you are at 80 credits, out of that 120. And any new debt that you take on, when it goes into repayment, that's when the clock will start and when you can accumulate credits towards that 120. So you will likely receive forgiveness on some of your loans before you do others, if that makes sense. Okay. Someone else asks, if I forgot to file the updated form one of the years to confirm my employment, do I need to file a form for that specific year or just file the employment verification form for the most current year? Cece, actually, what would help me answer your question is, are you still working for the same employer? I'll answer that in two ways. If the year that you missed was from a previous employer, then you will need to submit a form for that previous employer for that year, okay? Otherwise, if you're still working for the same employer, okay, what you can do is just submit, one form right now that will basically indicate when your start date was and then say you are currently employed. So it should cover that entire period of time, any previous years, right, going up to present day, all right? Okay, let's see. Last question that I'll take here. Someone asked, I have 20 or more payments on public service loan forgiveness. Can Savi lower the current payment? Absolutely. And I'm going to show you exactly how we can help you to do that in just a second. And there was a question about the pricing for the Savi services, and I'm going to touch on that in just a minute as well. But one of the great things for all of you county employees, your employers as counties have really stepped up and have subsidized the costs of Savi services for you all. And I'm going to tell you exactly what that gives you access to, but it's pretty incredible. So you're not going to have to worry about any costs when it comes to using Savi. Access to one-on-one support from our student loan expert team. We handle all your paperwork, you name it. So excited to share that with you all in just a bit. Okay, so now I want to transition and talk about some of the more recent policy and program updates when it comes to student loans. And this is as of today, February 13th at about 4:30 p.m. Eastern time. I mentioned that because things are changing day to day. And so, we want to make sure we're giving you the most accurate information. And I'll talk about how we communicate with all of our borrowers and users on any important updates going forward. So first, I want to talk about the current state of income-driven repayment plans, all right? And starting off with this SAVE plan. I'm sure many of you may have heard about this plan in the last couple of years. It is the newest income-driven repayment plan that was introduced by the Biden administration back in the summer of 2023. Okay, and it was supposed to be the most affordable of all the income-driven repayment plans to date. However, it faced lawsuits that unfortunately put the plan on hold. Okay, so there are about 8 million borrowers who enrolled in the SAVE plan. And borrowers already enrolled in that SAVE plan were put onto an administrative forbearance automatically, I would say about 6 months ago. Okay. This forbearance means that they do not have to make a payment that month. Their payment is $0, and they are not accumulating interest. The reason they were put on this forbearance automatically was because when these lawsuits came through and the SAVE plan was forced to be put on hold, they could not actually process payments into the SAVE plan any longer. So all borrowers that were currently enrolled were put onto this forbearance. Okay. Now, if you are enrolled in the SAVE plan and currently on, that forbearance, you can switch to another repayment plan to begin making payments again. But those SAVE forbearances are expected to last through this summer, but that could change if there are any sort of executive orders that come through that might push, the SAVE plan into extinction sooner than that. But I want to make something very clear, especially for all of you who are likely pursuing public service loan forgiveness, is that if you are enrolled in the SAVE plan and therefore on this forbearance, these months in which you're on forbearance do not count as qualifying payments for public service loan forgiveness. Okay. And I know it's frustrating because you did nothing to be put onto this forbearance. Many borrowers, want to willingly make a payment into that plan. Even if you were to make a voluntary payment right now, it would not count towards your PSLF. But you may be able to do something called PSLF buyback to get credit for these months that you've been in forbearance. And I'm going to talk about the PSLF buyback in just a little bit. All right, so I'll come back to that, but want to make everyone aware again, who may be on this SAVE forbearance and working for a county, you are not accumulating qualifying credits during this time. And we'll talk about what you should do, if you are trying to pursue PSLF in just a bit. Now, also want to make everyone aware that two of the other income-driven repayment plans, what are called the PAY and the ICR plans, are now available again to enroll. This enrollment was previously limited last year as they were trying to really push everyone into this SAVE plan. And when the SAVE plan was put on hold, they decided to open back up enrollment into those income-driven repayment plans. So those are available to enroll into or to switch into if you are currently on the SAVE plan. But either way, whether you're looking to enroll into an income-driven plan for the first time or switch plans, you should expect application processing delays from your student loan servicer, whether it be Mohila, Advantage, et cetera. That servicer is the entity that reviews your application, processes it, and is in charge of enrolling you in the plan and sort of collecting that monthly payment. We are seeing their processing times are more delayed than ever. It's taking upwards of 1 to sometimes 3 months for borrowers to hear back from their servicers on their enrollment status. So again, this is something that Savi helps borrowers to navigate and ensure that we hold those servicers accountable if any issues should arise. All right, next policy update I want to touch on is the impact of late payments. And this is something that I think is really important because it can impact you today. So when payments resumed for the first time after that nearly 3+ year payment pause during the COVID pandemic, okay, so back in October of 2023, that's when payments officially resumed for the first time, they instituted what was called the on-ramp to repayment. And this was essentially a 12-month period of protections, almost like a safety net for borrowers as payments were being turned back on. During this period, anyone who missed a payment, was late with a payment, made a partial payment, et cetera, would not be penalized like they normally would. For example, falling into delinquency or even default. Now that on-ramp to repayment, okay, so that 12 months of sort of safety net ended last September, all right? However, it wasn't until January of this year that borrowers actually really started to feel the impacts of that on-ramp ending. And so beginning in January of this year, missed payments could incur the following penalties. Big number one here, it can impact your credit score. All right, so during the COVID pandemic payment pause and during this on-ramp, missed payments, things like that, were not reported to the credit bureaus. They are now being reported to the credit bureaus as of January of this year. Okay, so that can have a real impact, a negative impact on your credit score. And as we all know, unfortunately, credit scores, really determine so many things in our financial lives. You also can fall into delinquency after 3 consecutive missed payments and into default after 9 consecutive missed payments. Okay, and when it comes to federal student loans, if you are in default, all right, or you fall into default, after you have reached that default status, the federal government has the ability to put you into a garnishment or sort of tax offset, meaning they have the ability to garnish 15% of your wages. Every paycheck, 15% will come out and go to your student loan payments. They also have the ability to garnish your tax returns and your Social Security. So that's something we want to make sure that any and all borrowers try to avoid as best as possible. Now, just to be clear, forbearance, like this SAVE forbearance, if you have been enrolled in the SAVE plan, does not count as missing a payment. All right, so that you're in no risk of falling into delinquency or default. That forbearance is a special separate status. You have no payment due that you're missing. But otherwise, if you have missed your student loan payments, you will start to see those impacts. And again, with federal loans, they don't stop coming after you until that loan is repaid, or, I know this may sound morbid, but death. Upon death, federal student loans are immediately discharged for a student loan borrower. So they're not passed on to a next of kin or anything like that. And for borrowers who may have already been in default before the COVID payment pause, you should expect collections to resume soon if they have not already. So if you are currently struggling to make your payment, or you can't afford it, or you think you've already missed a few, I encourage you, be proactive and utilize Savi for help in finding repayment options and getting enrolled in a lower monthly payment plan as soon as possible. And I'm going to show you exactly how we can help you all with that in just a bit. Okay, next policy update is around something called the one-time account adjustments. So these one-time account adjustments were an initiative under the Biden administration Department of Education to essentially right some of the wrongs of a lot of the mismanagement and servicer error that had happened over the last decade or so, in which borrowers may have been pushed into a forbearance, were not told about their repayment options properly. And so as a result, despite being in repayment on their student loans, were not actively making payments on their student loans. So what these one-time account adjustments did was they said, all right, we're going to go through every single federal student loan borrower's repayment history in their account. And we are going to give them credit for certain periods of time that they weren't necessarily making a payment, but they were maybe in repayment. So this included things like if you were on a forbearance for 12 or more consecutive months or 36 or more cumulative months, right? What they did was they went through and they awarded borrowers credit for those periods of time as if they did make a payment. And that credit that they awarded would count towards things like public service loan forgiveness, right? So this had been an ongoing thing for the last 2 years prior to the Trump administration, and basically wrapped up right before Biden left office. And so if you were to go to your federal student aid account on studentaid.gov and logged in, you should be able to see updated on your student loan account sort of what they are calling, income-driven repayment and PSLF forgiveness and payment tracking. So you should now be able to see exactly how many payments you've been given credit for, okay? You can also track this progress in your Savi account, and I'm going to show you that in just a bit as well. But these adjustments basically gave borrowers credit, for past payments that previously didn't qualify and put people a heck of a lot closer to loan forgiveness. The Department of Education estimated that borrowers would receive, on average, about 3 years of additional credit towards forgiveness, okay? So, if you're thinking about the time during the COVID payment pause, right, that was 3+ years, plus an additional 3+ years you may have gotten from this account adjustments, that's 6+ years towards the 10 total you need to qualify for forgiveness. So you may be a heck of a lot closer than you think, right? Now, some borrowers are still seeing updates to their accounts sort of in real time as we speak. So if you do not see this reflected on your studentaid.gov account yet, this is something you can let our team at Savi know, and we can work with you to monitor that with the Department of Education, right? But again, really important for county employees pursuing public service loan forgiveness. Now that these payment counts have been adjusted, you want to make sure that you've submitted employment certification forms for PSLF for any and all periods of employment that you have that qualify. That's what turns those payment counts into actual qualifying payment credits for PSLF. All right, last thing here I want to touch on is the future of the Department of Education. Many of you, I'm sure, have heard things in the news in the last week or so that the Trump administration is considering an executive order or action to dismantle or reorganize the entire Department of Education. Officials have discussed some type of executive order that would shut down any functions of the agency that aren't written explicitly into statute or move certain functions to other federal departments. Now, just to be clear, eliminating the Department of Education outright requires an act of Congress. So this executive order, if there were to be one, would likely call for developing a legislative proposal to abolish the department entirely. However, we're hearing and seeing that Trump's advisors are sort of still debating the specifics of the order, and the timing. But regardless, any changes will likely take some time, again, especially because they would require a legislation to happen, right? They need to go through Congress. And the fact that the Secretary of Education nominee, Linda McMahon, has yet to be confirmed by the Senate. Her hearing was actually just today, this afternoon. But the big sort of takeaway, at least for right now, is that it's unclear how any of this would impact student loans and specifically the repayment and forgiveness programs that you all have access to. At various points in time and throughout previous presidential administrations, There have been proposals to move the student loan portfolio over to the Treasury Department, for example, or to transition back to having private companies own and manage the loan program. But important to keep in mind, those operational shifts would not inherently change the underlying programs available to borrowers. I mentioned earlier something called the Master Promissory Note. This is something that you signed before you received your federal student loans. And in that Master Promissory Note, by law, you are afforded access to income-driven repayment and public service loan forgiveness. So the legality of removing that access right there, right, already has, there's a precedent in place that would make that even more difficult, okay? Also something to keep in mind, most changes or proposals to change certain programs would likely only impact new or future borrowers. Most of those include some clause about grandfathering in existing borrowers. So for all of you with existing student loan debt, you likely wouldn't need to worry about a lot of these things, again, because they would only impact or go into effect for new student loans. Okay, so let me just take a quick peek at the Q&A here to see if we got any other questions that came through. Nope, I don't think so. Okay, so now I thought it would be helpful to sort of go through some of the frequently asked questions. I've work every day with borrowers across the country, but really a lot of county employees. And so I sort of put together, some of the top questions that I've been getting from other and fellow county employees around what's going on, with student loans right now. So first, and a big one, should I stay on the SAVE forbearance or switch to a new repayment plan? So, like always, when it comes to student loans, we say here at Savi, there is no one size fits all solution, okay? And that is applicable here when it comes to whether or not someone should stay on the SAVE forbearance or not. So the SAVE forbearances, as I mentioned, are expected to last through this summer, okay? And some borrowers may want to take advantage of not having to make payments for as long as possible. I mean, myself included. It's nice to not have to make that $500 or more payment a month towards your student loans. On the other hand, SAVE forbearances do not count towards forgiveness like public service loan forgiveness, right? And so borrowers that are concerned about delaying their forgiveness that they're working towards, right, and wanting to get credit for each and every month of that service may want to change into a different plan and make payments so that they can be getting credit for these months of service. I know every month counts when it comes to getting to that 120. So if you want to take advantage of not making payments right now, you can stay in the forbearances, right? If you want to start earning progress towards forgiveness again, you can switch to a different income-driven repayment plan. Ultimately, the best decision is going to vary from borrower to borrower and depend on your personal situation. But the best part is that Savi can help you determine the best course of action for your situation. What do those other repayment plan options look like as far as a monthly payment? Would it be significantly higher than you may have been paying on the SAVE plan, right? Things like that. We can show you what those options look like and then assist you in getting into a different plan if need be. All right, next up, will income-driven repayment plans go away? So some borrowers, and I've seen a lot of this, in the Q&A and comments and chats on my webinars, fear that the Trump administration will make things more difficult for borrowers. But I want to provide some comfort in that just a simple cost-benefit analysis suggests that that's unlikely. Why? Well, because while student loan forgiveness remains unpopular with Trump and the Republican base, there aren't widespread calls to redefine things like discretionary income or adjust the percentages borrowers pay each month. Those things are important in determining a monthly payment on an income-driven repayment plan. And changes like these would be legally complex and pretty unpopular with those affected, across both parties. And so unlikely to be seen as a win, in that case, all right? It's also worth noting that congressional offices, both Republican and Democratic, are filled with tons of recent grads struggling with their student loans and living in an expensive city. And so, the potential benefit of making repayment more punitive compared to the potential downside makes changes like those unlikely. Now, it could be that instead of, or it could be, sorry, that the Trump administration proposes a new all-encompassing income-driven repayment plan and does away with the 4 existing ones, right? But there will always likely be access to some type of income-driven repayment plan that, again, calculates that monthly payment based on your discretionary income and your family size. And then last but not least, I'm going to bring up that buzzword, the master promissory note. Access to income-driven repayment plans is guaranteed in that master promissory note, or MPN. And again, that's the agreement that you sign when taking out your federal student loans. So it is legally binding that this be offered to you. And obviously, therefore, it makes it harder to remove this as an option. All right, another big one, what will happen to public service loan forgiveness, or PSLF? So let me take you back to the first Trump administration. When President Trump was first elected in 2016, many borrowers feared it would mean the end of PSLF. During the first 2 years of his term, Republicans controlled both houses of Congress, yet no plans to eliminate PSLF were seriously considered. In fact, under the first Trump administration, we actually saw an expansion of the PSLF program. They designated a $300 million fund towards PSLF to go towards borrowers who may have gotten tripped up along some of the technicalities along the way, weren't on the right type of repayment plan, didn't have direct loans, right? So this fund was designated to give borrowers pursuing PSLF access to the program and to be able to receive forgiveness despite not having all of those qualifications. So, that's an indication of what actually happened under his first term. But really, because PSLF has been statutory law since October 2007, eliminating it would require an act of Congress. Even if Democrats are in the minority, the Senate filibuster provides some protection. And as I mentioned before, PSLF language is also included in that master promissory note. MPN, that's our buzzword for the day. Last but not least, when proposals to eliminate or seriously alter PSLF have been made in the past, they usually include provisions to grandfather in existing borrowers, right? So as I mentioned, any of those would only impact new borrowers who had yet to take out those student loans. So all of you in pursuit of the program now would still be able to benefit from it, regardless of any new changes that come through. All right. Last thing here, I wanted to talk about this PSLF buyback. Maybe by a show of hands, how many of you have heard about this PSLF buyback option? Okay, I see a few of you. So this was released somewhat under the radar last year, but I'm going to try to give the best synopsis of what this is. So borrowers currently on this save forbearance, right, that aren't making payments and are pursuing PSLF forgiveness, right, and obviously not able to get credit for these months, may want to take advantage of something called the PSLF buyback, since these save forbearances, again, don't count towards forgiveness. This buyback is the one way to retroactively get this period of time counted towards PSLF. What it does is it allows you to get credit for periods of time where you were not making payments, such as this one, this save forbearance. Basically, you make a payment to make up what you would have been paying during that time and retroactively get credit for this. So let's say when you were enrolled on the SAVE plan, your monthly payment was $50 on that plan, okay? And then you were put onto this forbearance, right? Well, how the buyback works is essentially, let's say there are 6 months that you've been on this forbearance that you want to count towards PSLF. You can buy back those months of time by essentially paying what you would have paid under your normal monthly payment, right? So $50 a month, okay? The one important thing here is that the buyback only happens when you're at the finish line for forgiveness. So you must have already 120 certified months of eligible employment, okay, in order for you to submit a buyback request, okay? You can submit that request under what's called the reconsideration request portal on studentaid.gov. And we have an incredible help center article that details exactly how to go about this process. But you can do that again through studentaid.gov. There are currently no plans to eliminate the PSLF buyback. We haven't heard it mentioned in any of the proposals. So it is a reliable option, but again, you would need to be at that finish line in terms of your certified months of employment, okay? Oops, apologies here, guys. All right, last thing, what do I do if my payment is too high? And I saw a couple of these concerns come in through the Q&A. So if your monthly payment is too high and unaffordable, you can use Savi's personalized repayment estimator to explore your other repayment options, whether that be on standard repayment plans or income-driven repayment plans. You know, we here at Savi recommend enrolling in an income-driven repayment plan. Usually that's going to provide the lowest and most affordable monthly payment, and it's going to ensure that your payment counts towards forgiveness programs like PSLF. So after entering your information in the Savi application on your account, you'll be able to see what options you have for lowering that monthly payment and potentially getting that loan forgiven based on your employment and payment progress. All right, so my final thoughts here to sort of put a bow on all of this. I know that this is a lot of information to consume in one sitting. The big tip moving forward is being proactive. You know, we don't know what the future holds. Every day brings new updates, especially when it comes to the legislative and regulatory agenda of this new administration. But it's possible that loan servicers, your Mohila, Advantage, et cetera, you know, could face less accountability going forward and become even less helpful for borrowers. Likewise, qualifying for forgiveness may become more challenging, you know, administratively difficult. So in this type of environment, you know, borrowers need to be proactive. If you're working towards loan forgiveness like PSLF, you know, making sure you understand those program requirements and documenting your progress. And this is a big, big tip here. I highly recommend downloading copies of any and all statements and communications with your servicer, screenshots of your servicer account, of your account on studentaid.gov. If you make a call to your servicer, take notes, write down what you asked, what you were told, and when it happened. You know, hopefully these notes might not ever be needed, but they could prove helpful in the future. So again, just I would say overcompensate when it comes to documenting any of this stuff and staying up to date. You know, don't ignore student loan news. It might be tempting to sort of unplug and disengage from politics and news, but given the challenges borrowers might face, it's important not to miss major developments. Which brings us to the fact that Savi is here to assist you in all of that. We continue to monitor every aspect of the student loan system on a day-to-day basis and want to be the trusted resource for you to provide you with the most accurate and up-to-date information. So to help you do that, we send policy updates via email, breaking news updates, and we host regular workshops and webinars to ensure that you all have the most recent information at your fingertips. So if there is anything important that comes out that would impact your student loan situation, you will hear about it from us here at Savi if you have your Savi account registered. We're always advocating for borrowers, particularly government employees and county employees, to ensure that you all have access to these affordable repayment and forgiveness options. And as always, we're going to notify you of any potential impacts to your situation. So it's important that you make sure that your Savi account is as up to date and complete with all of your information, that you've synced or connected your student loans to your Savi account. That way we can actively be monitoring them on your behalf and enrolling in our premium plans, which you all have access to at no cost. you can reach out to our support team if you ever need any assistance or have any issues or questions along the way. And with that, if you do have any questions about your situation, again, you can reach out to our support team for one-on-one help once you've enrolled in that Savi Essential or Pro. So next steps, I know we are running up on time here, folks. To get started and access your Savi account, you can scan this QR code here, or after today's workshop, everyone will be receiving an email with a link to activate your Savi account. So no need to do anything now. Again, you're going to get this all in your inbox. But using Savi is fairly simple. We like to think of it as 3 simple steps. Instead of having to fill out a bunch of these different applications to enroll in IDR or PSLF, with Savi, you have one application. We call it your Savi application, where we ask you some basic questions. And then from there, you see your options, and we pre-fill and submit all of your applications for you. So can we help you with your loans? Yes. After, again, entering that information, and these are simple questions. It should take you no less than 10 minutes to complete your Savi account. We'll show you your best options as far as repayment and forgiveness goes. And if you want that personalized assistance, one-on-one with our dedicated internal student loan expert team that is trained by yours truly, make sure to upgrade to one of those premium plans. And again, those have been subsidized by your county employers, which is actually incredible. And we will help you resolve any service or issue, answer any questions, make sure you're on track for forgiveness. Any of the anxieties that come up throughout this process, no concern is too big or too small. You receive an email from your servicer and you're not sure what it means, you can forward it on to our team and we'll help make sure that you're on the right track. So you can apply for these programs through Savi, right? You can see here, this little screenshot is an example of how we might show you what one of your options as far as repayment and forgiveness goes. So this person is seeing what their new monthly payment could be on the pay plan, which is an income-driven plan, what their total payment over time would look like, how long until they'd be eligible for forgiveness, and how much forgiveness they may be eligible to receive. And then with a click of a button, we're going to pre-fill and digitize all of those necessary forms, their income-driven repayment application. And down here, this is an example of the employment certification forms. This person has 3 different qualifying employers. And with that click of a button, we're going to pre-fill those forms and actually send them off to your employers for you, your current and previous employers, regardless of how many you may need to fill out. We manage that whole process for you end to end. So again, when you're going through and setting up that Savi account, in order to access all of that application support, the one-on-one support, you want to make sure that you select one of the premium plans. Our most popular is Essential. And again, that's been subsidized for all of you county employees at no cost. Thanks someone in your county HR. And so you have access to all of this, and you'll see when you're going through your account how to activate that. And last but not least, if you ever need to reach out for help, assistance along the way, you can click Contact Support in the bottom corner of any page of your Savi account to reach us. We have live chat available, messaging available, and telephone instantly, all for those Essential premium accounts, which again, you all have access to at no cost. All right, so next steps. Again, want to make sure everyone accesses that Savi account. You can scan this QR code here, or again, you're going to receive an email after today's session with a link to activate your account. Make sure you've enrolled in that premium plan at no cost. Again, you can access all of those premium services, and make sure your Savi account is complete and up to date. You've gone through and let's get those forms submitted for either income-driven repayment or public service loan forgiveness. And if you want to chat with one of our experts one-on-one about your situation, you can reach out through your Savi account. All right, so that about wraps things up. Let me see if any other questions came in through the Q&A. All right, someone asked, my servicer indicates my repayment plan is IDR. Is that a plan that I can pursue PSLF upon completing the 120 payments? Cece, yes, that is. IDR stands for income-driven repayment. So you are likely enrolled in one of the income-driven repayment plans, but when it comes to qualifying for PSLF, doesn't matter which income-driven repayment plan you are enrolled in, you just need to be enrolled in one. So you should be good to go. All right. Any other questions that I can answer before we wrap things up here? I appreciate everyone attending here today and hope that this was helpful. Appreciate any and all feedback. We're going to be doing more of these in the future. And for any of your family members, fellow colleague, employee, county employees, please feel free to share the word. Again, you'll all receive an email follow-up from today's session with the recording and the information that we talked about here today. But we really hope we can be a helpful ally for all of you going forward. Okay, another question that came through. Someone asked, were folks pushed into the SAVE plan without enrolling automatically? This is a great question. So the SAVE plan actually replaced a former income-driven repayment plan called Repay. And so borrowers that were previously enrolled in that Repay plan, I believe there's about 2 or 3 million borrowers total, were automatically put into the SAVE plan. Okay, so they sort of eliminated Repay and it became SAVE. So borrowers that were enrolled in that Repay were automatically put onto the SAVE plan. They didn't have to apply or anything like that. All right, any other questions that I might be able to answer before we wrap things up? All righty. It looks like not. Well, thank you all again for attending. And if you do have any questions, I know it always happens when things wrap up the webinar. That's when the questions will come to you. You can ask those to our Savi experts through your Savi account. All right, a few more came through here. Someone asked, are the payments by month or number of payments submitted? The payments, as far as qualifying credits for PSLF, Susan, I'm assuming that's what you mean. They are by essentially you can receive one qualifying payment credit per 1 month, per 1 calendar month. So if you split up your monthly payment into 2 payments in a month, you're still only going to get 1 qualifying credit for that month. It just needs to be the total amount due for that month, needs to be satisfied. Okay, another person asked, does a level repayment plan, not an IDR, qualify? So as far as previous payments, and when I say previous, I mean sort of pre-2025, payments that were potentially made under the standard plan, which is a level repayment plan, so not an income-driven plan. As part of the account adjustments, borrowers were given credit for payments made under different repayment plans, but going forward under PSLF, only payments made under an income-driven repayment plan will qualify. So you're going to want to switch into an income-driven repayment plan in order for any payments going forward to count as qualifying payment credits. All right. Lastly, someone asked, how can I get the number of payments qualifying for PSLF corrected? So, if you or, anyone else on today's session believes there's been an error in the calculation of your PSLF payments, I highly recommend reaching out to our team so they can look over your account. We'll look back through the employment certification forms and the dates of that employment certified and your repayment history to see what you should have. And then we can work with you to submit a formal request through the federal ombudsman of the Department of Education that oversees correcting any issues or mistakes on those accounts. So CC, I would highly recommend reaching out through your Savi account to our support team to let them know what's going on, and they can take it from there. All right. Well, I think that's it. So again, thank you to everyone for joining today. I hope that this was helpful. We'll certainly be hosting more of these in the future, and look out in your inbox for some follow-ups from us from today's session. Thanks so much, everyone. Susan, you can access the recording. We're going to be sending you an email with a link to the recording. That'll come about 24 hours from now. You should see that in your inbox. All right. Thank you, everyone.